If you're trying to buy a home in 2026 and you have been turned down because of your debt to income ratio, or you've been approved but you want to be approved for more, this video is for you. I'm going to break it all down for you. I'm going to give you a couple ideas on how to get approved or increase your pre-approval amount, so make sure you save this video. If you're new here, my name is Carlo. I've been helping people for over 25 years purchase and refinance. Let's get right to it. Oh, and by the way, if you like this video and you want me to give you a fourth bonus way of getting approved with student loans, type the word "for" in the comments. The first way is to shift the loan type that you're applying for. For example, USDA is awesome, but less than 1% of first-time home buyers use it because not everyone's going to qualify for it. Or let's say you're going for a conventional loan and you don't qualify, you might qualify for FHA. So one of the first things that you can do if you've been turned down is consider the source, who's turning you down, what type of overlays, and what loan type. A lot of times, simply by looking at someone's scenario, I will just shift the loan type to another one and boom, they're approved or they qualify for more. Number two way is to get the seller to do a permanent rate buy down, not a temporary one. If you do a temporary buy down, there's nothing wrong with that, but it does not increase your pre-approval amount, but a permanent one will. So let's say, for example, you're close as far as what you want to qualify for, or you've been turned down and you go to a seller and you get them to pay your closing costs. If you apply that money to a permanent buy down, that can many times increase your pre-approval amount. The third one, there's a little controversy around it, but there shouldn't be if you do it the way I'm about to tell you. It's restructuring your current debt. Now, some people will tell you, you don't want to do that because if you do that, it's going to be a bunch of people hitting your credit report. That's true, but that's not what I'm telling you to do. What I'm telling you to do is to understand what type of debt you have right now, what are the interest rates that you're paying on that type of debt, and then going to different lending institutions and running your scenario by them. Now, they will not give you a full approval without actually pulling your credit, but you're going to give them the scenario. For example, I literally just helped one of my clients buy a home by refinancing her car. So I called a credit union for her. I've got 2 relationships with credit unions, and I'm like, look, this is the scenario. And they're like, based off of that scenario, we should be able to get that done. Now, they did pull her credit, but you got to be able to pick and choose and know when it's time to restructure what you're currently paying, because if not, you could be overpaying, especially with rates being a lot lower. Then what you do is you get with a lender, and if you need help, you can reach out to me. I can help you with it. You do a credit refresh. So you go and you get your finances redone. Maybe it's a car. You save money with doing a car refinance, or you restructure credit cards. Now, of course, your spending habits in that scenario need to change, but that is a very good way to qualify if you've been turned down, possibly qualify or even qualify for more.